Good day, everyone. My name is Tony Iyke, and today I want to teach you guys basically what I look out for when it comes to finding out what the higher time frame directional bias is saying. Now, directional bias is basically like the overall direction of the market on the higher time frame, because trust me, if you're trading in line with what the directional bias of the market is saying, it's easier for you to find setups because you're trading in line with what the higher time frame is saying. But if you're trading opposite of what the higher time frame is saying, you're more likely to get stumped out on your trades, simply because you are trading against what the general direction of the market is saying on the higher time frames. Now, we already know that there are three ways that market makes its movement. Now, either market is trending to the upside, trending to the downside, or market is ranging. So we already know that we are either on an uptrend, that's market making a series of higher highs, then higher lows, higher highs, then higher lows, higher highs, then higher lows. This is what the uptrend is all about. You can literally use a trend line and they will connect. And you also have a downtrend, which is market making lower highs, then lower lows, lower highs, then lower lows, lower highs, then lower lows, lower highs, and lower lows. Then we'll have the ranging markets, basically markets going from support to resistance, resistance back to support, support to resistance, resistance back to support, support to resistance, and so on. So this is what the uptrend, this is the downtrend, this is the ranging markets. Now, these basic market structure movements, I still apply them to my analysis simply just to get direction of the market, because you are meant to be trading in line with what the higher time frame is saying. Now, when it comes to directional bias, we don't really focus more on reversals for it. We focus on continuations. If the higher time frame is bullish, we intend to join the bullish move, and if the higher time frame is bearish, we intend to join the bearish move. If it's ranging, we intend to be inside the range. That is basically what directional bias is all about. So this was GBP JPY trade. I took this trade as of last 2 weeks, I think. Now, I want to use directional bias and apply it to GBP JPY, because there is no one way of analyzing directional bias on higher time frames. The same analysis you can put on your lower time frames, you can also put that on the higher time frames. The only thing is that on the higher time frames, the moves tend to last more. It tends to last longer, simply because if you make your analysis on the 4 hours time frame to get directional bias, 6 4 hours candle makes up a full day. So it means you can literally trade markets in one direction for a whole week by getting the directional bias on the 4 hours time frame. That is why if I buy, I intend to keep buying for probably like the rest of the week, or for like 4 days. Like, even if I don't stay on the long to the end of the day, whenever I close my profits, next day I wake up or try to analyze again the next day, I still stick with my directional bias, simply because I got the direction on the higher time frames. So what I do is, because I said we have three ways the market makes its movement: the uptrend, downtrend, and the ranging market. I apply all these three market movement structures to the higher time frames on the 4 hours time frame to see basically whether I'm going to focus on buys or sells, or do you understand? So for example, for people that trade SMC, because I trade SMC, but structural liquidity point of interest, the point of interest that I pay attention to is like the breakers and then the other blocks. So these zones, these POIs I pay attention to, I can draw them out on the 4 hours time frames and confluence it with the current trend of the market. So already coming to GJ, we can see that GJ is what on an uptrend. GJ is what on an uptrend, because you can see higher highs, you can see higher lows, higher highs, higher lows, higher highs, higher lows. This is GJ is on an uptrend on the 4 hours time frame. So that being said, we've confirmed that directional bias of GJ is what? Bullish. Now, we don't just jump in and start buying or immediately. We wait for extra confirmations. The confirmations we wait for is for price to pull down to the supposed zones we intend to take a buy from. Then we confirm whether the bullish move is still in progress. So now what I mean is, if you draw out your trend line, either you wait for a bounce on the trend, or you mark out zones that markets can possibly come down to for reversals. If you pay attention to GJ, this is an order block zone here. Even the zone that price bounced from is also an order block zone here. So the zones that markets can possibly take a bounce from, you mark them out. Even this zone that GJ is coming down to, this is also an order block zone, and it also matches trend line. Do you understand? So when price comes to these zones you're expecting a bounce from, you don't just take a buy simply because price is there, because sometimes markets can be tricky. Price can literally come, go under the trend and eventually push back up again. This happens sometimes. Do you understand? So to avoid these traps, that's when you now wait for extra confirmations using the strategy that you trade for reversals. Now, because we're intending to take a buy at these zones, we're expecting some kind of rejection at this level, which is a reversal strategy that we trade with, because I trade structural liquidity point of interest. And now what you pay attention to for the structure part of the strategy is either continuations or reversals. Now why price is at this zone, because this is, this is the 4 hours time frame. You don't just now start looking for your confirmations on the 4 hours time frames. You can scale down to lower time frames. Do you understand? Now what I'm saying is, why price is approaching these zones on the 4 hours time frame, on the lower time frames, markets can be doing something like this: lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This move happening while market is making this same move on the 4 hours time frames, because the time frames will differ in movements, so but it's still the same direction that market is heading to. So if price is here on the 4 hours time frame and you go down to the lower time frames, you start expecting some kind of strategy that you trade for reversals. So for me, I trade structure shift, inducement, POI for reversals. So now what I'm expecting is for price to give me a market structure shift, while at this same zone I'm expecting that reversal from. So if price comes here and takes out this last high, that's a structure shift. If I get an inducement and then price will come and trigger for my POI, this has already confirmed that the move is, that the next leg to the upside has been confirmed. This particular reversal strategy that I got while market is at this zone has given me that extra confirmation that I'm now bullish. So let's pay attention to what this did on. This was 1 hour time frame that I used for this analysis on GPJPY. So while price approached this zone, you can see that market actually gave us that structure shift to the upside, gave us the inducement. Then my POI was not really clear on this time frame, so I had to go to the 4 hours time frame to get my POI, which is the other block here on the 4 hours time frame. So this was where the buy triggered from. So this was where I marked my buy from, this 4 hours time frame here. Then eventually price came, triggered the POI, and then started buying to the upside. Now, once you've confirmed the move to the upside, you don't start looking for sells. You have to first pay attention to the directional bias. Directional bias is bullish, but where do we see the market get to first before we now start looking for reversals to the downside, since we are still already bullish? That's where logical thinking comes in. We already know that the pattern of the market is what? An uptrend. And an uptrend is made up of a series of higher highs and higher lows. If market makes a higher low, the next possible move is to take out the previously existing high. That is the whole pattern of an uptrend. So it means that each high that market makes, once market confirms a new upside movement, the previous high has to be taken out. So it means that if we're currently at a higher low, the next move to the upside has to be a higher high. It means that we're not looking for anything sells until the last high in the market gets taken out, which is here, this high. So it means that every single day that I wake up and price has not yet taken out this high, I'm only focused on taking buys. So the first buy you took from this other block is the first trade. Let me just give you guys an example of how you can take multiple trades in the same direction just because you understand the directional bias of the market. So this is the 15 minutes time frame here. The first buy was from this zone. Eventually there was another buy again from this field OB zone. It can also be this other block here. This is the second buy. The third buy happened from this other block. That's the break of structure, inducement, this other block, third buy. So these are three days worth of trading. The first buy, the second buy, the third buy here, which is the first buy is here. Sorry, the first buy happened to be here. Do you get? Now we're still aiming to take out the last high in the market, which is this zone. So before price takes out this last high, any opportunity I see to take a buy, I will jump onto the buy. Now the second buy happened here, this other block here. Still targeting to take out that 4 hours high. The third buy happened here. Still aiming to take out the 4 hours high. So I will keep looking for buys until market completes the cycle of an uptrend, which is it making a new higher high. So I knew that the directional bias of GJ as of that time was what bullishness. There was no point of me looking for sales until market completes the cycle of the uptrend. So this trade was the 1:16 risk to reward ratio. The second one 1:8. The third one 1:5.6. Trading the same direction of the market simply by confirming the directional bias of the market on the 4 hours time frame. Now notice that it was only after market took out the last high in the market that GJ started having some kind of sell to the downside. Do you understand? It was only after market took out that high on the 4 hours time frame that GJ started what selling. Now I'm trying to see if I can show this analysis. Hang on. Trying to see if I can show the analysis here. My Telegram is taking time to load, but you guys should bear with me so I can show you guys this. I'm trying to see if it's not loading properly. When it loads, I'll come back. So that is it. So once you do this, you've already completed the cycle of an uptrend. Then you start waiting for price to come back again on the next trend and also match into a zone. This is an order block zone. This is also a zone on the trend line that market may possibly have a bounce from. Now, when market is at this zone, you don't just take a buy. You wait for price to give you the confirmation, which is what the strategy that you trade for reversals while market is at that zone. Same applies for a downtrend, but this video is getting too long and I can't put everything in one video. This is just an example of what I look out for, and this was how I was able to trade GJ and take a buy 3 consecutive times, just using the 4 hours time frame to get a confirmation to the upside. I applied this to other pairs too, but I just tried to show you guys the GJ on. This has not loaded. If this has actually loaded, I would have shown you guys the screenshot of the trade, but that's just it. So I can't put everything in one video and I have something urgent to do. So this is just a brief of this for the bullish side. Same applies to the bearish side. Whatever way I just taught you guys for the bullish move, flip it to the downside and you get your analysis that same way. I may make a longer video, I may not. I don't really have energy for that, but I may. You get. So yeah.